Hello viewers, welcome to my channel Sensor 360 Investor. In this video today, let's take a look at the markets segment of our 360-degree trading framework, and let's check in on where we are with the markets. In particular, I want to focus in on continuation from a previous video where we looked at whether the markets bottomed or bottoming. So we have a little bit more data now. So let's see. There's a lot of talk in the financial media about that the market now is starting to broaden away from the narrow participation of the mega tech companies, which has pushed the indexes up. But there's a lot of coverage now that money is now moving into other areas of the market. So let's validate that in this video as well. But before we begin, quick word about the disclaimer. Chart's not providing financial advice. Please pause, read through this, then continue. Okay, welcome back. And let's move on without much further ado in the show. Okay, so we still have this roadmap that we're kind of keeping an eye on and see how this plays out and if it's true to form. In past markets, it certainly has shaped up this way. And that's probably how this has been derived as a composite set. Okay, so let's take a look at the broadening question first, right? So I had at the end of May, beginning of June, I happened to look at the markets and take some notes about what the situation was, and in particular, I was looking at how many stocks, and this is using the Russell 3000 as the base, how many stocks were above the October lows and how many were below. So as of the effectively as the end of May, we could see that roughly 1,500 stocks were above the low, but still over 1,000 stocks were below the low, and we had less than 1,000 stocks outperforming the benchmark index, whereas 1,751 underperforming the benchmark index. So not a lot of progress being made in a positive fashion, and that kind of spoke to markets being narrow, etc. But since I pulled out those numbers within the next 2 weeks from there, so through to this period, there's been a lot of talk about the markets abroad and so forth. So if we look at the data here, we have 848 stocks that are now performing the benchmark, which is actually a drop of 8, and we have 758 underperforming, which is a rise of 8. And then compared to the October lows, we did climb slightly by 69, and so the 69 shifted from here. So it would be a true statement to say that the participation is broadening. However, when you look at the number isn't material at this stage. And then the other piece of the puzzle is that everyone's pointing to the small caps, and the Russell now is participating. So definitely the Russell's moved up a little bit, 2.2% since this period. So again, not really material. So we'll have to see if this continue to follow through in the coming weeks. We'll take a snapshot again at the end of June, so in about another 2 weeks' time. Okay, so let's move on to the US markets and take a quick look, and then we can see that. So this is over a kind of a long year time frame, and actually it's 2 months. So we can see the Nasdaq has definitely been the shiny new object in terms of strength, and that index has outperformed the benchmark index. And then we've got the industrials have been falling through, commodities picked off a little bit, 10 years kind of holding up where it was. Then oil is in a trading range, gold's come down. Interesting, the dollar's also come down. So those two are kind of moving almost in tandem with this, a little bit of a lag. Usually gold reacts to the dollar. But notably, the VIX, the fear index, is kind of a unequally low, kind of, and then suggesting that over the next 30 days, it's not really expecting a lot of movement in the markets. And we haven't seen the VIX this low for a while. Okay, so a quick look at the sectors. So we can see that discretionary and technology are really both doing extremely well and outperforming the benchmark index. So these are both strong growth sectors, and as is communication services. But this one is kind of straddled by the benchmark itself. Then we have industrials, which also are economically sensitive sector-wise. And then bringing up the rear, energy's kind of fallen off with the price of oil, and staples has come in a bit. So definitely kind of getting the right shape to your barbell now in terms of growth is taking the lead, and the defensive sectors are at the opposite end of the spectrum, with kind of the cyclicals and the volatile in the middle. So definitely has a bullish look to this. And if we look at the mega caps that have been driving the index this whole year, we can see that from a relative strength, Tesla obviously has moved up quite a bit, as has Facebook off the lows, and Nvidia from its AI announcements. Then in the medical field, Johnson Johnson had its issue with the lawsuit, but seems to be recovering. Apple, steady Eddie, moving up, as is Microsoft. Walmart's been bouncing around a little bit. Google is a bit of a laggard, but now's the upward bias. Visa is kind of flat, and energy, as we know too, is kind of falling off. So ExxonMobil is languishing. If we look at the volatility, we can see how it's coming real low. 13 hasn't been down there for a while. S&P 500 continues to move up, and we noted in an early video here we have a new look of an uptrend. You got higher lows, higher lows, higher lows, higher highs, and a high. Off of this, so the trend remains intact for now. It's also a little extended in the short term. If we look at the market dashboard, you can see that the Feds did not raise in their meeting last month, and they've kind of pushed it out to potentially July, September. But here is all the Fed movements, and typically you want to keep an eye out on the CPI and PPI. So again, since the Fed is still kind of in the hiking cycle, keeping bread, the econ indicators like the yield curve are still flashing warnings. So that's red, but the market and the economy are anything but red. So those are green for now. And then if we take a look at the small caps, so we can see small caps have moved off this little trading range, but they still haven't taken out that 200 area. So if they take out the 200 area, maybe the bullish bias will get confirmed. Financials are not participating. Typically, you want to see financials participate, so there still may be some stress. And then semis definitely participating, and we can see that with the big mega cap tech stocks leading the charge. And then we also see a very big swing in bullishness within the AAII sentiment survey. And then here you can see 45.2% are now bullish, which you can see it's kind of at the highs, but it's above the benchmark long-term averages. And the fair side has dropped to 22.7, which is well below the long-term averages. And so we've actually had quite a big swing towards the bullish sentiments. And then with the business cycle, we still have risk, and the risk is because of the lag effect. Then if we look at market breadth, so the benchmark's up 14.85% for the year. Number of stocks beating the benchmark 27.4%. Those below are still at 72.6. Stocks that are below the benchmark but positive, so above 0% returns at 30, and stocks below are negative, about 60. And then about half the stocks above their 200-day moving average. So the breadth has improved from the last time I posted this. slightly, but still a ways to go before we can feel good about whether we are truly in a bull market. Okay, so that wraps it up for this video. A video that actually marks 100 videos. So if you are not a subscriber, please subscribe, share, like, add a comment if you would like to. Thanks for watching. Thanks for listening. I will see you next video. Goodbye.